Today, we sit down with Nic Espanet, and Nic talks about his journey from the healthcare world into multifamily investing, first as a limited partner and then as a general partner. If you're looking to scale your portfolio, this conversation is filled with gems. First and foremost, about the importance of community and surrounding yourself with the right individuals, and then understanding how to be resilient, how to overcome challenges, how to build better systems and processes that ultimately lead to success. Make sure you check out today's conversation right here with Nic Espanet on Multifamily Insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmoncapital.com/7 questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. Now, as the host of the Flex Forward podcast, Nic is passionate about featuring top business leaders, entrepreneurs, and professionals who are making an impact in their industries and communities. Now, every episode he does is designed to help them showcase their expertise, elevate the brand, and connect with like-minded, high-achieving individuals. Now, on top of that, he is also the founder of Flex Equity Group based in Texas. Let's welcome to the show, Nic Espanet.
Hey, John, thanks for having me. I'm excited to join you today and visit with you. I'm glad to be here.
Yeah, Nic, great to have you on the show as well. I went over your bio and your background at a very, very high level. Why don't you take 2 minutes to fill in some of those gaps?
Sure. I've been in the multifamily world for about 10 years. Before that, I was in healthcare and really kind of ended up here. Not wasn't my initial goal. I started looking at real estate for something different to do with my retirement, just because the stock market bored me when I tried to read over it. Thought I was going to go into the single family world, but then as I was kind of doing my due diligence and research, came across more and more multifamily opportunities, and just some things to kind of go down that path. So started that in 2016, and then was able to get my first. I did a couple of passive investments initially, thinking I was just going to be an LP, but then after a while, I'm like, you know what, I can do this myself, and really jumped in with both feet. So got my first deal co-syndicated with 2 other lead GPs. It was a 100-unit property, and I'm wrapping up my 10th deal now. We have it'll be 157 units. Our biggest deal is 288 units, and I've been a lead GP on 8 of those 10 that I'm taking part in. So it's been a good ride. We've been through the bumpy part of 2021, 2022. We're still kind of working through some of those, but I think it's a great time to be in the multifamily world in real estate. Just with so I feel like we're coming back out of the dip from earlier this year, or from the 21-22 time, as those are starting to mature.
Yeah, Nic, you mentioned that you kind of started off in the healthcare space and wanted to get into multifamily more so to diversify your income. Really didn't like the stock world and couldn't quite figure it out. And I'm the same way. Like I can figure it out, but on the same note, it's just the moment you figure out it's going to change anyway. So, but stocks are a different animal altogether. You start off as an LP investor, like that enough to say, you know what, I can do this. I want to be a GP. Become a GP, do a 100-unit deal. To date, you've done 10 deals. 8 of those 10, you've been a lead GP, with the latest one being about 157 units there. When you look back at that time frame, specifically going into that first investment opportunity, you mentioned that, hey, the stock market just wasn't your thing. What was it about multifamily investing that grabbed your attention?
I think real estate, just because it's a tangible asset, something you can see, that it's there. And there's, to me, as I learned more about it, there's a lot more benefits, because you get some tax benefits from the real estate, just from the depreciation. But I think the biggest thing is that it's a building, it's there, and the vast majority of the time, you're always going to have the value in the building. There are times where the market may dip down, and but those are few and far between and short lived. But the biggest thing was that it was a tangible asset. I it was just more something I enjoy going and visiting the properties, and visiting my staff and encouraging them, being on the asset management, project management side when we take over, getting all the projects lined up. I just it's I thought I was going to like doing fix and flip stuff, but my wife and I bought an older 1950s home and tried to live in it and do the repairs. I'm like that. I like working with my hands, but not when I have to live in the middle of it all that time. So, but going out, even though I'm not doing the work now on these bigger projects, I'm getting to oversee it and watch the contractors and see the progress and then see how we're improving these properties for the residents and the tenants that are there. But just that I can touch a property, where it's buying a stock or something that, I guess I could go buy a Coca-Cola or an iPhone, but it's not the same as being out there, being in the middle of it, and seeing the properties.
Yeah, you talk about the tangibility of it, right? Just being able to touch the properties, to see it. It's a different investment because at the end of the day, that building is worth something, the land is worth something. And yes, the economy can shift and change, and policies may, impact that valuation. But the intrinsic value of having, a residential multifamily property doesn't really shift. Someone needs a place to live. If it's a desirable location, desirable area, that's going to be there. Whether or not it goes up 10% year over year or 3% year over year, that's a different conversation, but there's intrinsic value. And that's the point of what you're talking about.
For
And for
sure.
you like being able to get your hands dirty, whether it's you physically yourself or someone else, a contractor, partners, and being able to, what we talk about is forced appreciation, right? Being
Yes,
able to
for sure.
create your own value on these deals versus hoping the CEO of that tech firm that you have stock in is making the right choices, because you don't know.
Correct.
So I love that part of real estate as well. And I know a lot of our listeners, they already bought in and they're drinking that Kool-Aid. Talking about the practicality or the transition from, the theory of investing as, as an investor, as an LP, to actually doing it. What were some of the challenges that you faced making that first LP investment?
I mean, the first LP was, getting to know the people. Is it, I think my LPs, your LPs, they need to know, like, and trust you for the most part. So, building that relationship, and then especially when you don't have a track record, but it's getting to know people. My first deal, we partnered with a guy that he had the track record, but myself and one other partner that had less experience or had zero experience really came in and did it. We agreed to do all the 95% of the work, and he helped. He raised the most money. He brought the most investors, so we got to establish our credibility and just really made sure on that first deal. Well, but on that first one, we it wasn't really a loss leader, but almost treated it like one because we got a small cut of the GP share. But I'm like, this is our time to show people what we can do, that we're going to come out, we're going to, really be involved through all the steps. We're going to be good communicators. And so just establishing that. And I learned that from, I had done 3 LP deals and just seeing, and we didn't have a bad GP on any of them, but all 3 of them communicated different. Would they answer questions, or how often did they send out updates? And so we just took the things we liked from each one of those and built. That's how we do our communication and our newsletters. We send out monthly updates to our investors. It is our goal that if somebody calls, texts, or emails, we get back to them on that same day, unless it's late at night. And we may not always know the answer, but at least want to reply and go, hey, I don't know that answer, but give me a couple of days to either get with somebody at our property management company, the CPA, whoever it is that knows that. But it is our goal to always reply on the same day, at the very minimum, or 24 hours to somebody. And it may just be, give me a little time I've got your question. Give me some time to do some research.
I like what you talked about, because there's a lot of great lessons there when you invest across multiple deals, right? Lessons learned. You talked about, having 3 LP investments and just taking pieces of, hey, I like how this person communicates this, or I like the way they do this, and being able to learn from that and really, borrow, steal, whatever word you want to use, those best practices to
Mm-hmm.
inform how you operate as a general partner. You also talked about, not having that experience on your first deal as a GP, so you leaned on someone else who had that more experience. And by doing that, you gave up more equity. So you and your partners did 95% of the work, but you didn't necessarily take 95% of the GP's pie because you knew you needed that person who had the experience, who was able to bring that capital because you guys were borrowing that experience. And then as you did that, certainly as you move forward on other deals, you can, have a fair share of the pie, if you will. And I think that's really important for our listeners because if you want to be an active investor, if you want to be a general partner, and you don't have the experience, you got to sacrifice. And I know a lot of people who are not willing to do that. They think
Right.
that, oh, well, it's my deal. So, I want to have 70% or 80% or whatever that number is. And the truth of the matter is, no one would trust you to lead that deal when you have no experience. And rationally speaking, they shouldn't. And you shouldn't trust yourself. You have zero
Correct.
experience. Why would you trust yourself just because you think you can? And I'm all about optimism. Don't get me wrong. I'm all about positive mindset and optimism, but I'm also about making sure you protect your investors. And the best way to do that is by building a successful team. And no one in
For
their
sure.
right mind, even if you could go draft, rookie year Michael Jordan, you wouldn't draft a rookie year Michael Jordan and not surround him with experienced vets, right? Who can show him
For
the ropes
sure.
and, hey, here's how we do this, or here's how you navigate that, or with an experienced coach. Like, you wouldn't do that. You wouldn't build a team of rookies, and you wouldn't do the same thing here. So just change that mindset. If you're going out there, you're looking to start off, if it's the blind leading the blind, it's not really a great idea. Make sure you build a seasoned team and be willing to sacrifice a little bit to make that happen.
For
I want to
sure.
talk back to our LP investors before we go back to your transition as a GP. You mentioned that, you were able to learn from those three LP experiences. How did you find those general partners that you invested with initially? And did you have any reservations about either them or the deals before you made the investment?
I was part, or still am part of a real estate investment group in DFW, and so just we have a every other month networking event. So getting to meet people at those gatherings and getting to know them, and then talking to other people that had invested in some of their other deals. That was a good, using them as references, using other people as references. A little nervous, but I was around for, I mean, 6 months. It wasn't a ton of time, but because the first month I joined, I was like, I'm a little skeptical. Let me kind of see what's going on. Then, that's how it's there. I'm like, if these guys, if this is a scam, they've got a lot of people scam because within the group there's physicians, engineers, IT people, dentists, lots of high net worth people that were investing within this group, and so that gave me some comfort that that was 200 or 300 people probably within this group that met, and they were investing also. Because yeah, at first I was like, yeah, this is this pyramid scheme. You come in like, what's going on here? And especially this is in 16 when deals were doubling
Oh,
and
yeah.
tripling people's money in 2 or 3 years. And like this just seems almost too good to be true. Um, we're not getting those same returns. I mean, we're right now we're looking at getting close to doubling money in 5 years. But that early teens, mid-teen time was when people could buy deals, go to sleep, wake up 2 years later, and the cap rate had compressed enough that their 100K became 200K, or their 50K became 100K, or more, maybe triple on that. So it's it what it was using references and getting to know other people. Now I would have a hard time meeting somebody online and just if somebody's doing a 506 C where somebody advertises a deal on the internet or Facebook or whatever. I don't know that I would invest in that unless somebody I knew them, because I like every deal that I've been an LP and I've physically met the person at an event, talked to them multiple times, and knew other people that knew them.
Nick, I think that's golden information, right? You're talking about being a part of a community, and that's
Mm-hmm.
something that helps so many people if you're looking to start off. And that's what you did. You joined a community. You're able to vet these individuals, meet them in person, get to know them, not just them and who they are and the numbers. Forget the deals, right? You didn't mention anything about a deal, right? That's what our listeners to take away. I asked you how you got to know them, vetted questions. You didn't say anything about the numbers or the deal and the locations. You talked about the people. So, community, insight, focus on the
100%.
community, being around other people. Two, referrals, references. Find other people who have invested with them. What was their experience like? They have a good experience. Is the communication there? but get to understand what your expectations should be based on working with these people, right? And once you're there, now you can move forward with that investment because you've gotten enough information. And you mentioned it, you thought, hey, I don't know if this is a scam or what. And obviously, you're kind of moving somewhat carefully and cautiously, and you're cautiously optimistic, but you still are somewhat guarded. But as you got to know more and more, you felt comfortable and ultimately move forward with those deals. So get to know people. There's certainly nothing wrong with doing it online and connecting with people. We meet a lot of our investors online, but it's okay to pick up the phone or do a
Zoom,
Google
yeah,
video or something like that and get to know them. If you're in the market, grab coffee, grab lunch, but get to know them and definitely talk to other folks who have partnered with them. I think it's really important when you're starting to build that rapport and getting to know people that you're going to be entrusting with. I mean, typically we're talking, $50,000, $100,000. So it
sure.
is not a small investment. So definitely want to take the time to get to know these individuals. Let's talk about
Well,
that flip,
but
right?
I'm
Yeah,
going to
please.
on that because just think because every deal that's being presented, they're going to give you good numbers. I mean, it's something. So it's no like and trust the person you're investing with because somebody's not going to go present about, oh, we're going to have 20% return in 5 years or negative. It's a marketing packet and it's going to look good or they shouldn't be doing it. They won't be in business long. So get to know the people because every present deal packet's going to have encouraging returns. So you need to know and like and trust the people that are running the deal.
There you go, right? Focus on the people, not the package. Love it. So let's talk about you flipping that switch, right? And going to the other side of the table. Was that always the intention, or was there something that happened being an LP that made you realize you could be a GP?
Um, I knew I wanted to be a little more control, but I was being in healthcare. I was a physical therapist, and it's got more and more to where, as a therapist, insurance dictated how we treated patients, and I just got more and more frustrated with that. And we were starting at that time. They were starting talking about cutting our reimbursement. I'm like, I didn't do this for 20 plus years to start going my income to start going down, and so and I would had to be somewhere from 8:30 to 5 or 6, whatever the time was every day. And if I wanted a vacation day or take a day off, hang out with my family or whatever, I had to go to somebody else. So as I was around that real estate world more and seeing the freedom that you can have within investing, because you can do it. I've had a friend that he and his wife and daughter lived in a van, and they not out of necessity, but they went over 3 years. They went to every state in the United States in a van, and he worked and did asset management from. Had a satellite and all kinds of stuff in this, really decked out van. But or I'm leaving to travel here in a few days, but we'll still need to be able to do some of my meetings and calls, um, just to have the freedom to do that stuff. As I started seeing that, I'm like, why am I? And reading Rich Dad Poor Dad, that kind of got the Robert Kiyosaki book, got my wheels turning. Like I am working for money instead of getting money to work for me, and that's where I saw. And it's LP world is nice and has some good returns, but if you can even improve that by going in and doing the work. My wife and I do often joke that we traded our 9 to 5 jobs for 5 to 9 jobs because it's not sitting by the pool with a fruity drink every day. Type, but you can have those moments of freedom, and just where you're not having to crank along because we just finished a capital raise, and there were days I was on the phone in here at my desk from 7 a.m. until 9 at night, email calling, for few weeks just getting that taken care of. And we're it's actually hit to where I've got all that wrapped up. I'm like, oh, I've got free time during the day. What do I do with this free time?
Yeah, Nick, I mean, you're talking about flexibility, right? And lifestyle demand and lifestyle choice. And that's the thing that you start to realize because you start off as an LP recognizing, okay, hey, I need some passive income. But as your job situation started to shift, you started looking at kind of the lifestyle side of things and wanting more flexibility.
Mm-hmm.
Freedom for sure, but before freedom, we'll take flexibility, right? As if you can just control your schedule and where you need to be and what you need to do, it's like, well, I can do what I need to do, but if I control where I'm at when I'm doing that, that makes life a lot easier. So that was one of the things that attracted you to being a general partner and aligning yourself with the right people, having the right team. That really allowed you to grow and scale. You mentioned, being on phone calls for the capital raise from, 7 a.m. to 9 p.m. And obviously the market has shifted. How has your approach changed over the last few years, particularly when it comes to both finding and vetting deals as well as working with investors?
I don't know. It's changed a lot. Well, I'll say early on, we could send an email out and have the money raised in a week, maybe a couple of follow up calls, and then we've gone through phase now. It's calling and texting. I think that's still important. What I talked about with my partners, like we have to remember right now, this capital raise is our number one important thing, or in the top five important things we have going on right now. Everybody else has 50 other things in their life, kids getting them to sports or school or their job. So they have this big list. So we got to find that little fine line of not to be annoying, but to how to stay front of mind. So is it every 3 days, every 5 days, kind of, and also just kind of judge some people's personalities on calling. And this deal we raised, we completed, at least I wish the bank was open today. We have all our documents completed, but I'm just waiting on the money to come into the bank. We did it in about 2 weeks, which was slower than I thought this deal was going to go, but faster than we have had anything in a while. So I was pretty excited about that because we got it done without having to bring any outside private equity or anything in. Just me and one other guy that are doing the raising. We split it and were able to hit the raise goal within it. And his came in much quicker. I think he did a better job. We had a pretty long PSA. He was calling people. I think next time I will start calling people while we're still talking through the purchase sell agreement negotiations, just trying to get some more people locked in. We almost went. I think I went too quiet during. Hey, we're negotiating a PSA. Be on the lookout because it took a little bit of time. I should have been sending a follow up, or at least the people that showed fill out our interest form, calling them every 7 to 10 days, 14 days or so, just saying, hey, here's where we're at. Just want to make sure you're aware. Here's a few little nuggets that we can share until we get the contract. So it ended up working out, but I think I let everybody go a little cool while we had that longer period, and so it just took some time. In Texas, and we still don't know, this law will change September 1st on mass texting, that you have to go through a whole lot of hoops. And so it looks pretty punitive, if at least what we're reading. It's SB 140, Senate Bill 140. And so I backed off on texting because I have through my CRM where that's where we got the biggest bang for our buck, is sending that and phone calls. But I still sit down and try to call everybody that's showing a level of interest. But the having that potentially a very punitive email or text marketing thing, it's like, I'm not going to push the limits on this. I don't want to get a several $1,000 or more fine. So that I think made it a little more difficult, but in the end it worked out. It's just, sitting here dialing, calling and texting. I only texted people I had been texting with before. I didn't want to text anybody new once that law went into effect.
Yeah, a couple things there. You mentioned, this latest raise. It took 2 weeks, where a little longer than you thought it might take, but still faster than some of the previous raises. And really, some lessons learned there is just not letting that cool period happen. Want to stay in touch with these individuals. You said for 7 to 14 days. Keep in mind, we're talking about a live deal. So when you have a live deal, probably want to have more frequent touch
Yeah.
points.
Once we got the PSA and people were interested, I was calling about every 3 to 5 days.
There you go, 3 to 5 days. But
That's
you knew the
my
deal was coming, so from there you're reaching out. Once you had the PSA signed, more 3 to 5 days. And the reason I ask is, one of the questions I always get from investors, whether it be coaching clients, community members, they always want to know, well, how often should I be reaching out to prospects? What's your take on that question?
I think you kind of have that funnel. So early on, you can't. When I was saying 7, 10, 14 days, my funnel was huge, so you couldn't get through it. But as you get closer, I think it's every 3 to 5 days, unless somebody said, and keep in mind, if someone says, I'm getting my stuff moved over to my IRA, it's going to take 6 days, 7 days, then I'll put reminders, a little reminder task. I'm like, don't call this person until the seventh day. Give them whatever time they said plus a day, or and it can be as simple as, hey, how are things progressing on your paperwork? Something like that. And I even had one of the guys that he is a first time investor moving his stuff over to an IRA, and he's like, hey, he goes, you have the right pace or the right rhythm of following up with me. You're not annoying me, but you're helping keep me on
Mhm.
pace. I'm like, yeah, you got to find fine line, and some people may not mind every other day, and some people it may drive them crazy. See, that's I think 3 to 5 days is probably a sweet spot, and
Probably
I try
helps to
not to bug
have,
people on the weekend unless it's absolutely necessary.
yeah, it probably helps to have a clear follow up too, right? I think what happens a lot of times is people just follow up and say, "Hey, did you see my deal? Hey, did you see my deal? Hey, you gonna invest? Hey, you interested?" Versus having either some new news or helping to progress the
For
conversation
sure.
forward, right? I mean, obviously, if someone hasn't responded, probably a different follow versus someone who said, "Yep, hey, I'm interested. Put me down for 100K. I just got to, move over some funds to the self-directed IRA." Those follow-ups are probably a little bit different in nature, right?
Correct. And we're usually running 2 tracks. I still haven't refined. So we have one, we're doing an email about every 7 to 10 days. About, like everybody gets it. Hey, here's some new news. Here's our landing page and everything, whatever's going on. And then people that have shown interest, that's more who I'm texting and calling. But we'll send the big, unless somebody, we do, once somebody says I'm not interested, we tag them as not interested. So they're not getting, because I don't want them to think I'm spamming them because I want them to get the stuff on the next go around. So we'll put those as I think they go to close, so they get tagged as closed, so they're not getting the mass emails, or they're not getting any emails at that point. But then the people that have either said they're interested or filled out the soft commit form, that's who I'm trying to call every 3 to 5 days. And the funnel gets smaller and smaller. Either people are getting moved to closed, or they're showing more interest, or they're getting moved over to that they filled out their paperwork, they've wired their funds, so we use a go high level setup that so it can just move people over. That's made it a lot easier. The days of me having spreadsheets with 15 tabs at the bottom that everybody has a different. This guy has a little interest. This has more interest. But having the go high level setup is makes that a lot easier. And I've gotten better at it. This is my third or fourth raise using the go high level. And early on, I'm like, this thing's awful. It's just I cannot figure it out. But now I'm gotten a lot better at it to where that's where our texts, emails, and even my phone calls go through that. That way we're also tracking that we've been talking. I can go look and go, oh, I talked to Bill on 3 days ago on the phone. I sent him a text on this. It's all, whereas before I had a just Excel, and I pretty much reinvented the wheel every time we did a deal but I didn't have a system. Early on, it was easy because within a week, the first 2 deals we were 24 and 48 hours subscribed. So it's more just keeping people from signing up. But that was before we had portals. Everything was done. We'd have to email them PDFs of the stuff. They'd have to print them off and sign them. Back in the good old days, the portal makes that a lot easier, and then Go High Level does also.
Yeah, I love the evolution, both from a technological standpoint, but also just systems and processes, right? You're just getting better. You understand what folks are looking for and how to follow up. And that's what comes with time and experience. And going back to where we started the conversation, as you do more deals, you're going to be better at that. And being better at that and forecasting allows you to do a better job following up and communicating people and being able to follow through with exactly what you said in those communications. So, really great information for anyone who is looking to grow and scale. Think through it, right? You want to have a clear communication plan. You want to have a path to move people along the funnel, right? So from
For sure.
interested to soft commitment to actually funded and invested in the deal to communicating and actually retaining them as an investor. It takes intentionality and a clear follow-up plan, and that's what you've been able to do. And it's a balance too, where you want to be persistent, but not,
Not
you
annoying.
don't want to be annoying,
For
and
sure.
that's the key in the balance that a lot of people struggle to walk that tight line because again, you can lose investors if you're showing that you're either desperate or you're just, just your communication
Annoying. Push
styles
too
annoying, you're
pushy.
pushing too
Yep.
hard, too salesy. I mean, you got to keep in mind too. I mean, we're talking about, again, 50,000, $100,000 or more. You know, people are really careful on who they invest that with, and you can say the wrong thing or come across as not the kind of person they want to trust if you're annoying in that approach there. So really
For
be
sure.
careful there, but also it comes down to building the relationship and actually knowing what you're doing there. Yeah.
100%.
Yeah. I want to go to your podcast real quick. You got the show
Okay.
Flex Forward podcast. It's really rooted in stories of resilience, reinvention, and rise. why did you launch this show, and particularly talk about, moving forward and highlighting the stories you highlight?
Just yeah, I feel like I grew a lot through the Robert Kiyosaki book, and so that really helped me. And so I want to be out there to where other people can hear this and know that I suspect 99, if not 100% of the people that have had success in life have been knocked down or had to overcome hurdles. There's even somebody born, unless somebody's just born with a trust fund, I guess that would be the exception. But most people, entrepreneurs like you or myself, you're gonna get knocked down, and it's how many times you get back up and work through that. So wanting to just highlight some of those uh, success stories that people have had with listeners to if to encourage other people. Hey, you might be knocked down right now, but get yourself up, dust yourself off, start taking baby steps again, and you'll start running before too long. So just having a platform to help others that are kind of maybe just getting started as an entrepreneur. Maybe they are still working the 8 to 5 job and they want to do something that creates more freedom, but knowing that there are people um, that have done it, or they may want to pivot to something different career wise. And, it's okay. Just be resilient. And I always, I've talked about with a few people. It's a meme. It's a picture of a guy digging for gold, and it stops like they dug forever, and then they stop like a couple inches from where the gold is. Or another one I like is like most people think success is a straight line, but it's this bumpy, rocky road with dips and cliffs and all kinds of stuff that you get knocked down and have to get back up. But just trying to let more people hear about that and know that they just have that resilience and persistence to keep going. Because that's in multifamily. When I talk with people, I'm like, it's not rocket science. You got to have a little bit of math and salesmanship. You understand some of that, but it's the people that are persistent and resilient. Because it took me a year to get my first deal. We kept looking for deals, making offers. We were offering in DFW and getting beat. But my business partner and I said, what can we do different? And that's when we started looking in secondary markets in Texas. So we chose, like, let's look at every city in Texas that is over 100,000 population with positive job growth, positive population growth, and at least 3 economic drivers. But we eliminated DFW, Houston, San Antonio, and Austin. So we started looking at all the mid-sized cities, because at one point we're like, well, maybe we need to start looking at other states. But that we're like, well, then we got to fly every time. We're just getting started. We're not wanting to spend a ton of money doing this. We got to get on a plane, get a hotel room every time. So we're looking at a few $100s just to go tour a property. Whereas Texas, we can drive to everything. Maybe spend $50 in gas to get there. $100 back then, probably 50. But it's just then that pushes to start looking at these secondary markets in Texas, and that's where we're right now. We're having more success on our secondary market stuff, just because those markets did not have a ton of building in the last few years. So we're still having the positive job growth, but we don't have a ton of new supply coming in around us. So we've actually had steady positive growth, whereas DFW and Houston's had negative rent growth. All the major metros in Texas right now are showing negative rent growth over the last year.
Yeah, a couple of things you said. One, on the podcast itself, really wanted to highlight these stories just about entrepreneurship, right? Just being an entrepreneur, understanding how to overcome the challenges. You mentioned Rich Dad, Poor Dad. And I think it's really important because most people, especially when you come from corporate America, many people are risk aversion, right? There's this
Mm-hmm.
risk aversion, and we do all these things to avoid risk, and part of it is, you know, we surround ourselves with other people, with other experts and things like that. It doesn't mean that you're not going to face challenges or have things that don't work out. What it does is it allows you to have the infrastructure in place to navigate those challenges and to shift the mindset to know that this is common in business. No one is flawed. I mean, the greatest entrepreneurs in the world have these challenges. Even the
Mm-hmm.
greatest leaders, period. I mean, they get into stories on Steve Jobs. I mean, Steve Jobs got fired from Apple. At one point he
Yep.
got fired. Elon Musk has been at the brink of complete collapse multiple times. Like, this is what happened. So it's part of the journey. And the point you're getting at is, um, it's about understanding what resilience really looks like. And when it comes to your multifamily story, you asked a very important question, which was, what can we do that's different? And I think that's a great question to ask, because a lot of times people try something, they bang their head against the wall, and if they don't get the result they want, then they just quit, they give up. Oh, this didn't work, or hey, the market's too hot, or
Hmm.
whatever the case may be, and they move on to something else that's easier. And in your case, you didn't. You just asked a better question. What can we do different? Instead of chasing these deals in DFW with everyone else, where it's competitive, we can't get the numbers to work. Why don't we look elsewhere? Not necessarily out of state. Yes, we thought about that, but we realized that created a whole different set of problems. Why don't we start looking at secondary markets?
Yep.
You've been able to do that, and the deals in the markets you're in are still doing well because they're not being hit with as much population growth. I'm sorry, not population growth, but development growth.
Supply. Correct.
And that's the same thing we're seeing in our Midwest markets. Our Midwest markets have performed well. We never had supply that started to come in and oversaturate the market. So for us, rent growth is still strong and positive. But you look at some of those hot markets, the Dallas Fort Worth, the San Antonio, the Austin, a lot of them are seeing rent losses right now, rent decline. And that's been a challenge in those markets. So
Hmm.
these things come and flow, they ebb. And it's funny because I know we talked about stocks. The one thing I still love about real estate is, even with those changes, we know over time things will balance out. It really just comes down to your business plan. And as long as you're not in a situation where you got to sell that property this year or next year, if you can hold on, eventually things will be okay. But you have to make sure you're investing in cash flowing assets with a sound business plan to operate. If you're doing that, for the most part, you'll be in a good position. For folks that want to learn more and connect, Nic, what is the best way for them to reach out?
You can go to our website, flexequitygroup.com. And then there's, if you want to set up a call with me, there's a link in there to set up a call, but you also kind of see what all we've been doing. But that's the easiest way to get in touch.
All right, Nic, we're going to transition to our round of insights. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmoncapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmoncapital.com and click on the mastermind button today. Give
Okay.
me a failure or an apparent failure that set you up for later success.
Ooh. So during COVID, we had at that time 3 properties out in Abilene, and that was, but even before that, we had a management company that was not. We were in the process of getting rid of them, and they were being difficult. But we'd been interviewing, but it takes time if you're changing property management company, and that company was going out of business itself. So their performance was awful, and so this is early 21, and I would go out and look at the property, and I would pick up 3 or 4 bags of trash. I'm like, what are you guys doing? People are walking up. So I got to where I just carried kitchen, like a whole box of kitchen trash bags in my truck. And I would go pick up, I'd take a picture and send to the region. I'm like, why did I have to pick these up? But one of the properties was having a bigger challenge than the others. And so my wife and I talked, and like, this is when I was still doing some physical therapy. We said, if we're going to keep doing this, we got to jump in with both feet here, go out there. So I basically was staying in Abilene 3 to 5 days a week. It's a 2-hour drive. So if my kids had stuff, I was driving home, going to sports, driving back the next morning, basically commuting 2 hours each direction. But I went out there and walked every day. We were occupied in the low 70s. So I was like, I want to see what each condition, but they couldn't ever get it done. So I just got a legal pad, walked every unit, came home, made an Excel spreadsheet. I'm all right. And I organized them by easiest to get back online to awful. And I said, these just need to be clean. Let's get them clean, get them on the market. These that are trash, we'll worry about those in a few weeks. or when we get these other ones filled up. So this, I guess the failure that property was moving down, but we got it back. It took us about 3 months to get it back to up above 90%. And then once we got the new management company in there, it never dropped below 90% again. And so that was one, in hindsight, we should have fired that property management company 6 months before, but they keep promising you the moon. Oh, we're going to get you a new regional. We're going to do X, Y, and Z to make things better. And it just slowly went up kind of quickly. We went from, and that was a deal when we took over, we were fully leased. It was booming. We were actually we had a second maintenance shop above the office. We were going to take that and turn it into a livable space because, things were booming so much at that point. And then within 3 months, we're like, all of a sudden our occupancy drops. Like, what is going on here? And so that the learning part was when you think something's going south like that, get involved sooner, get the replace the property management team, give them maybe a month or 2, 3 to implement a plan. But if they're not hitting their goals or very, very, very close to most of them, get rid of them. And they were difficult because we got the new company and we said, all right, we will pay you for your last 30 days, but we want you out in a week. And they refused. Part of the contract, they stayed their last 30 days. I'm like, I just want you off our property. We'll pay you. I'll pay you. You don't even have to work. Just leave. And I think they were doing something shady and wanted to cover more stuff up. I don't know why else they would stay when they could. We would have just paid them for that last month without them working.
Yeah, great insight. I appreciate you sharing a little bit more about that win there, or that challenge that you overcame there. Give me a digital or mobile resource you recommend for our listeners.
Oh, I'm so IT illiterate. I'm actually started using Chat GPT. Somebody sent me a I guess an AI analyzer, and I'm trying to compare it to one that we did. But I think having, when you first start, you don't want to spend a lot of money. Like we started out just sending emails kind of old school with an Excel. Then I went to MailChimp, and now we've got to go high level system. But, just keeping that organized, I think is great. Oh, I know something that's made life a lot easier is having a portal. We use Cashflow Portal. My first LP deal, people carried around packets of their PDF of their subscription documents and everything on paper. We would go to these meetings and look at them, and then it went to where we could email them. And then now having the portal where everything, you just basically DocuSign everything, but having a portal of some sort makes everything a lot easier. That it was my third deal. We did set up I think the third deal we did DocuSign early on, and we were one of I think the first ones within our group to set up. And that was, we had one guy that was more IT savvy, but we had, if we're an IRA investor, you went down this tree, I get a branch. If you're a cash investor married, and there might have been a better way, but back then for whatever your situation was, you clicked the link and then you went down this DocuSign. But yeah, use one of the portals. They're invaluable, I think.
There you go. And then Nic, for this round, we'll try to shorten the answers just a little bit, but we got a few more questions. Okay.
Okay.
All right. Give me the book you recommended or gifted the most in the last year.
I think it's Rich Dad Poor Dad, just in the last 10 years. I need to do this again, but I was giving it out to high school graduates. Also, we'd put money in it, like put a 20 every so many pages, and say you can't get the money till you've read to that page. I don't know how many of them actually stuck by that, but I just think that's a book I wish I would have had that mindset so much earlier. I read that in my early 40s, mid 40s, and then started pivoting. But it just gives you such a different perspective of how to treat money.
Give me a daily habit that helps you stay focused on your goals.
I think coming back to making the bed every day, it's not really a goal thing, but it's getting something accomplished. Like and the guy, the admiral talks about it. That, or in working out, I work out 6 days a week, and I get up at 10 to 5, and to get that done every morning. I meet with a group of guys that work out, but having something where you get your fitness or exercise done early, so you've kind of accomplished a hard goal. I was cold plunging. I need to get back to doing that. But I think doing something that's difficult and challenging first thing in the morning is a great get you on a good trajectory.
Give me your number one insight for scaling a multifamily portfolio.
I think surrounding yourself with other like-minded people is is probably number one, because people outside of the group will go, "Oh, don't why are you doing that? It's crazy." And having other people that you can lean on, either a mentor, or they don't even have to be partners, just other people within your community of real estate investors and GPs that you can bounce ideas off. I've got a couple of groups that we meet once a month, every 2 weeks, and just having those folks to that you can open up and be, say, "Hey, here's some challenges I'm having on this deal. Have you run into this?" I think just having mentors and peers that will help lift you up.
I love it, man. And listen, we talk a lot about community, so that tracks and is great insight there. All right, last question. We're going to lighten it up. You are in Texas, in the Fort Worth area. Give us your favorite place to grab a bite to eat.
Joe T. Garcia's. It's a restaurant's been there 40, 50 years. It's unique. They don't take credit cards. They've been there long enough. It's only cash. It seats like 1,200 people. It's just, but it's all 90% of it's outside. You feel like you're in like a coastal Mexican town or something, just plants everywhere and decorations, but they only have two things on the menu, either cheese enchiladas or fajitas. Well, and you can order a couple other small things, but it is, I've been going there for 30 years. Love going there. My kids love going there. So it's fun. It's but don't bring cash or bring your debit card.
There you go.
But you
Love
know
it.
what? They
Joe
will
T.
take, they're one of the
Garcia's.
only places that still take checks too. So I bring a
Okay.
check to right there if I don't have cash.
Well, I don't know where my checkbook is. I haven't seen that thing in years. So,
That's
hey,
about
well,
the only thing I use it for.
there you go. Nick, great stuff, man. Really enjoyed our conversation today. You talked about kind of your background coming from the healthcare space, really wanted to get into investing, really just because you weren't really feeling stocks. You wanted something different and you enjoyed the tangibility of real estate, being able to see it and feel it and drive value yourself. And from there, you started as an LP investor before getting to know people, really networking and getting comfortable investing with them, and ultimately investing as a general partner yourself. You've done 8 out of your 10 deals as a lead GP, and your latest deal, you're able to raise your capital and close in about a 2 week time frame. So, really great insights talking about raising capital. You talked a little about resiliency, making that shift in your market where you weren't finding the deals that you were looking for, and really just helping us understand what it takes to be successful. Again, for our folks who want to learn more, check out the podcast. It's called Flex Forward Podcast with Nic Espanet. And make sure you check out the website. Go to flexequitygroup.com. Nic, thanks again for being a great guest and coming on Multifamily Insights. We look forward to staying in touch with you, and I hope you have a great day.